If you look at the skyline of Singapore, you'll see the towering, glowing logos of some of the most powerful financial institutions on Earth: DBS, UOB, Citibank. But there's another multi-billion-dollar bank operating right in front of you. It doesn't have ATMs, it doesn't have tellers, and it isn't regulated by the government. Instead, it operates a fleet of A380 superjumbos. If you were going to design a business model completely from scratch with the specific goal of systematically destroying capital, starting an airline is a historically undefeated method. Operators must purchase depreciating metal tubes that cost upwards of $300 million apiece. They must survive the wild volatility of crude oil prices, and they must accept that a single global pandemic can ground their entire revenue stream to absolute zero overnight. Running an airline is, mathematically speaking, a terrible, fragile business. Yet, amid this notoriously volatile industry, Singapore Airlines seems to defy gravity. They consistently rank as one of the best, most prestigious, and crucially, most profitable airlines on Earth. During the 2024 to 2025 financial year, the group reported a staggering, record-breaking net profit of $2.78 billion on $19.54 billion in total revenue. To the casual observer, this looks like definitive proof that flying people through the sky is a fantastic business. But if you actually sit down, ignore the glossy PR, and read the underlying audited financial statements like an aviation economist, a hidden, almost unbelievable reality emerges. The actual business of flying passengers is fraught with immense volatility, and on its own merits, it's barely profitable. To understand how Singapore Airlines actually secures its financial dominance, you have to look inside your wallet. Modern aviation giants are highly lucrative, totally unregulated shadow banks, and they mint their very own digital currency. A deeper examination reveals that this record-breaking $2.78 billion profit was massively inflated by a one-off, non-cash accounting gain of $1.1 billion, resulting from the Air India and Vistara corporate merger. If we look strictly at the core operations of flying aircraft, operating profit actually declined by 37.3%, dropping to $1.71 billion. Why? Because physics and economics are unforgiving. This drop occurred despite passenger demand roaring to a record 39.4 million. The fatal flaw of aviation is that anyone with credit can lease a plane. Airlines flooded the market with extra seats, dragging passenger yields down. At the same time, the crushing weight of keeping fleets airborne took its toll. Expenditures surged past $17 billion as fuel and landing fees exploded. Scoot, its low-cost carrier subsidiary, watched its operating profit absolutely collapse by nearly 70%. Core aviation operations yield exceptionally thin margins and demand relentless capital expenditure. So, how does a company like this survive and build an empire? They do it by building a bank. During the 2020 pandemic, Wall Street noticed something insane. Loyalty programs were frequently worth more than the airlines that birthed them. American Airlines Advantage program was valued at $23.4 billion, an astonishing 192% of the airline's total market cap. Singapore Airlines' KrisFlyer hit a $5 billion valuation, roughly 63% of its market cap. These programs are no longer the simple marketing gimmicks of the 1980s. They've morphed into immense financial assets generating high-margin revenue from completely non-flight activities. Airlines didn't use their airplanes to save themselves during the downturn. They used these highly liquid standalone businesses as collateral to survive. The sheer scale of these valuations establishes that major airlines are deeply entrenched in the financial services sector. How exactly does a point system become a multi-billion-dollar asset? It happens because an airline manages a sovereign economy. Historically, airline miles functioned merely as punch cards, but the frequent flyer mile has evolved into a privately controlled flat currency. Singapore Airlines operates identically to an unregulated central bank, possessing the ultimate financial superpower, minting KrisFlyer miles completely out of thin air at essentially zero marginal cost. These miles hold immense psychological and monetary value, driven by the aspiration of one day redeeming them for a $15,000 first-class suite. Driven by aggressive digital integration, the program broke a historic milestone of 10 million active members by March 2025. That is 10 million consumers actively earning, hoarding, and trading a currency the airline invented out of whole cloth. The strategic brilliance lies in the fact that Singapore Airlines exercises dictatorial control over this economy. They determine total circulating supply, dictate exact prices, and retain the unilateral authority to wipe out your purchasing power overnight. Because every unredeemed mile is corporate debt on the airline's balance sheet, they must periodically adjust its value. In the frequent flyer world, inflation is called a devaluation. In August 2025, Singapore Airlines acted just like a central bank, raising interest rates by announcing a targeted devaluation. Highly demanded routes saw brutally steep inflation applied, with redemptions to Zone 10 jumping 20% overnight. Simultaneously, the airline introduced KrisFlyer access, bringing dynamic surge pricing to award flights. This actively manipulates its own economy to ruthlessly protect its financial margins. How exactly does minting a digital currency generate billions in liquid cash? The mechanism relies entirely on the commercial banking sector. The vast, overwhelming majority of KrisFlyer miles are not earned by passengers sitting in airplane seats. They're acquired on the ground, by consumers swiping co-branded credit cards for everyday purchases. Banks are engaged in a bloodthirsty competition to attract high-spending customers. To incentivize a wealthy consumer to sign up, the bank must offer a highly desirable reward. In Asia, the ultimate reward is the KrisFlyer mile. Consequently, banks purchase these digital miles in bulk, using cold, hard, physical cash. For Singapore Airlines, this is the flawless business model. The institution sells a digital currency, costing practically nothing to produce, to banks for hundreds of millions of dollars in upfront, high-margin revenue. The airline generated over $700 million from the bulk sale of KrisFlyer miles to partners recently, with overall KrisFlyer revenue exceeding $1.4 billion. These business-to-business sales occur at operating margins of 60% to 70%. Try finding a 70% profit margin on selling an economy seat to London. It doesn't exist. To secure this pipeline, the airline cultivated a dense network of financial partnerships with banking giants like DBS, UOB, Amex, and Citibank. Through the Kris Plus Lifestyle app, users execute instant microtransfers of reward points directly into KrisPay miles. However, Kris Plus applies a 15% haircut, an invisible tax ensuring banks continue purchasing miles at a blinding pace. The true mastery of the shadow bank lies in the unit economics of consumer redemption, built on three deeply entrenched financial pillars: spread, float, and breakage. First, the spread. Accounting for roughly 60% of net income, this is the fundamental arbitrage. The airline issues miles for cash at a premium price to banks, and eventually provides the flight at its own internal marginal cost basis. They buy low, sell high, and control both sides of the market. Second, the float. Generating roughly 20% of net income, this is a masterpiece of corporate finance. When a bank pays for a bulk order today, the consumer might not redeem those miles for years. During that interim, Singapore Airlines held hundreds of millions in real cash. The float acts as an immense zero-cost, interest-free loan supplied by the public, bolstering the group's vital liquidity pool needed to carry its $12.91 billion debt and maintain its $8.25 billion in cash reserves. Finally, the dark magic of the system: breakage. Contributing the remaining 20% of net income, breakage is the term for miles paid for by the bank, but never redeemed. Millions of miles simply expire. The airline actively estimates a breakage rate to periodically write down the liability and legally recognize the bank's cash as pure, unencumbered revenue. When a mile expires, they walk away with a 100% pure profit transaction. To exponentially grow the shadow bank, the currency had to be completely detached from the aircraft. This realization prompted the Kris Plus app, Kris Shop, and Pelago. Today, millions across the Asia-Pacific region earn and burn KrisFlyer miles daily to purchase coffee or book staycations. By fundamentally turning KrisFlyer into an everyday digital wallet, the airline transformed into a pervasive technology ecosystem. The absolute masterstroke occurred with a major policy shift on July 1, 2025. Singapore Airlines standardized the redemption value of a KrisFlyer mile to exactly 1 cent SGD across its entire digital ecosystem. This established a fixed, predictable floor value, effectively creating a closed-loop fiat system. When you save up miles for a first-class flight, you might extract 4 or 5 cents of value per mile. The airlines hate that because it hurts their margin. But when you spend your miles on a $5 cup of coffee at a strict 1 cent valuation, they clear their balance sheet liability incredibly cheaply. They completely isolate this profit engine from the volatility of jet fuel prices or global travel disruptions. It's a self-sustaining financial perpetual motion machine. The transformation of the modern aviation industry is complete. Generating profit solely by transporting humans has been superseded by financial intermediation and currency control. Singapore Airlines is undeniably a masterpiece of aviation engineering with an impeccable safety record. But financially speaking, the metal tubes flying through the sky are just the marketing department. The impeccable service, the iconic Singapore girl branding, the gourmet meals, and the luxurious suites at 40,000 feet are all just advertising. They're meticulously designed, incredibly expensive marketing campaigns engineered to do one specific thing: to make you and the bank that issues your credit card desperately desire the currency. By minting KrisFlyer miles at near zero marginal cost, selling them in bulk for billions, holding cash to earn float, capitalizing on breakage, and building a closed-loop digital ecosystem, the airline has brilliantly insulated its true profit center. The aircraft are necessary, but they're no longer the core product. They're simply the giant flying billboard that makes the multi-billion-dollar shadow bank fly. Singapore Airlines operates a highly profitable $10 billion digital bank. They just happen to use the world's best airline to sell you the credit cards.